Thank you for tuning in. I am your host, Joseph Martin. Hit that like and subscribe button to support the channel and hit that bell icon to receive notifications. Guys, I'm in a great mood today. I'm excited because we got a great show for you today. We are going to learn how to navigate the position statement in the award-winning trading platform ThinkorSwim, offered by the Charles Schwab brokerage. But before we get into that, I want to hit you with this disclaimer. The content in this video is for educational and entertainment purposes only. I am not a licensed financial advisor, and nothing shared here should be considered financial advice. Always conduct your own research and consult with a licensed financial professional before making any investment decisions. All securities, trades, and positions shown are for demonstration purposes only. Investing involves risk, and any financial decisions you make are solely your responsibility. You dig? I hope you dug it. Now, here we go. If you want to get paid like a professional, you got to operate like a professional. And I'm going to tell you something. Professionals are not trading from their cell phones. They might use a cell phone here and there, but they are not trading from their cell phones. Professionals are using computers, laptops, multiple monitors. I'm trying to tell you. And you know what? You think you got everything because you don't know what's missing. Trading from your phone is all you know. Now, once you actually trade from a full-fledged platform and you actually know what you're looking at and what's going on, you're going to be like, man, I ain't even seen this. Even if it's offered by the same brokerage, their mobile version does not have all of the stuff they have on their full-fledged platform. And then they have to just have something for somebody else to get them to participate. They want as many customers as possible. So they give them something that they will feel comfortable using. It's almost like a play app, in my opinion, once you actually see a comparison of the two. But you'll never see a comparison if you don't use the other version. So that's what we are going to do today. I'm going to show you how to navigate through the ThinkorSwim platform on the position statement. We are going to use a simulated account. So if you don't know what that is, and I want to let everybody know this right now, if you know a lot about investing or trading or you're familiar with it, great, I'm glad. But this is the thing. Everybody watching videos on YouTube isn't on the same level. So I'm going to explain a lot of this stuff, assuming you don't know nothing. And as we release more videos, I'll start redirecting people like, okay, we're not going to go over the basics. So I got a video for that. All right, so let's go to the ThinkorSwim charts so you can see what we talking about and what's going on. These are going to be our tabs. The active tab that we have right now is the charts tab. And you can tell that that's the one highlighted because it's light gray compared to all the other tabs. Now, here's the cool thing. If you mouse over a tab that's not active, it will give you the drop down of the sub tabs within that tab. So under tools, we know that it has think log, videos, shared items, and think script. We are going to navigate over to the monitor tab. So we're going over to activity and positions sub tab under the monitor tab. So when we look here, this is the area I want us to focus on before we really get into it. This area right here. You see PL open and PL day. P&L, very simple, profit and loss. So now when we see P&L or P/L, P&L, that's our profit and our loss. Now we need to know what open means. Open is the beginning or the start. Sometimes it's the beginning of time. Sometimes it's the beginning of a position. So now when we see P&L open, we know that this is profit and loss since the open. The open of what? Since we open a position. Position means the details of the trade or investment. P&L open means profit and loss since we started the position, which is a trade or investment. Before we discuss profit and loss day, there are some things you need to understand about the U.S. stock market. Even though there's trading that happens 24 hours a day, there's normal market hours. So normal market hours of a trading session is between 9:30 a.m. Eastern Standard Time to 4 p.m. Eastern Standard Time. That's normal market hours. Anything outside that is called extended hours. You got aftermarket hours, and that's going to be after the 4 p.m. and before 9:30 a.m. That's called pre-market hours. So we're talking about profit and loss during the day that the market is actually open. So the market is open Monday through Friday, a business week, unless there's holidays or reasons the market might be closed. So in an average trading year, we're just talking about the trading days, there's 252 trading days, even though it's 365 days in a year. But as the market has been evolving, they've been extending the time periods that they use to do trading. So now some securities trade 24 hours a day. So when we're discussing this part about the P&L day, since the open of that day. So now we know the most recent that we're referring to. So if the market was closed on Friday and it's Sunday, then the most recent trading day would have been the Thursday. So that's what we're going by. Now, your positions are constantly being updated. Why? Because there are some securities that trade 24 hours a day, and that 24 hours begins at midnight, 12 a.m. Eastern Standard Time. So that's what a day means. And those are the nuances that's going on behind the scenes so you won't get lost. I needed to make sure you understood those other things about the market. So what we want to focus on is right here where it says subtotals. We talking about everything on this line. Now we know those columns down on the end, the profit and loss since the open. And then we see the profit and loss since today. So we can't see how many positions we actually have right now. We just see that the subtotal of all the positions that we have open are currently losing $72.50 right here. We're losing $75. It's bouncing around because the market is open right now. That's what we currently losing with our active positions. Over here for the day, though, we're up $75.50. We got that. So now this is what I want you to focus on. Overall profit and loss YTD. That means profit and loss year to date. So since January 1st, 2025, we are currently showing a profit of $3,120 in the simulated paper account. It's play money, guys. Okay. Need you to understand that it is a play money account. This gives you the ability for you to practice in a controlled environment without the risk or the pressure of losing or using real money. That's what I love about it. So this is not real money. Just want to give you that disclaimer again. We're going to go over here where we see this symbol. This is going to be our drop down or expansion. So it expands the area we're focused on. That's what I'm doing. So we go up there, we click that. So now I can see my positions. So everything within this box is my current positions. We are going to focus on where it says instrument. Instrument, what's that? Piano, a guitar, some drums, some tambourines. What the heck is an instrument? An instrument is short for financial instrument. We're going to focus on stocks and options in the position statement. But I wanted to give you a list of some other financial instruments. You got stocks, which are also referred to as equities. And I'm going to show you that in the platform once we go back to it. You got stocks, bonds, options, futures, Forex, commodities, ETFs, and mutual funds. And just as a bonus, options are also referred to as derivatives. Like we have stocks where it says equities, we should see options with derivatives next to it. That's also a derivative. Okay, I wanted to show you what I meant by equities real quick. So if we go back to the charts and we go to settings, chart settings, when this menu comes up, I want you to notice, so it'll be easier to see on the white, this area right here. You see where it says general, price axis, time axis, favorite time and frames, appearance, equities, options, futures, and Forex. If you were looking for stocks, you wouldn't be able to find it. But now that you know, hey, wait a minute. If I know now that equities also means stocks. So everything that controls what you see on the charts dealing with stocks is going to fall under equities. There's a lot of jargon, parlance, language, vocabulary that is used interchangeably that mean the same thing. So depending on who you're talking to and what level they on, you'll get lost. Because if you only heard stocks, when you hear somebody say equities, you won't have no idea what they're talking about. So I just wanted to show you an example of that. We just went over what instrument meant. You see Bud, Bull, EIX, KHC, TAP, TSN, and ZBH. Those are called ticker symbols. Ticker symbols are used to identify securities. So that's another name. So we saying financial instruments. The other term is securities. So Bud is the ticker symbol for that security. So if we open up Bud by clicking this arrow right here, we can see the positions I have in this simulated account for Bud. Right here where it says Anheuser-Busch, that's the name of the company that's associated with that ticker symbol. That's what that is. Now, down here, let's go across in the column. So let me click it and hopefully it turns blue. It did. Wonderful. All right. In the column where it says quantity, it says -100. And the minus tells you that I'm short that position. What that means is that I sold shares. So you can open a position by selling, or you can open a position by buying. Now, this is where a lot of people get confused and they get lost. So it's common knowledge about the buy low to sell high philosophy and terminology and strategy in the market. But that's not the only way to make a profit in the market. But if you do buy low and sell high when you open a position and close a position, then what's happening there is that you buy to open. And when you're holding that position is called a long position. That's why we have this here. So long, long, long. And this is how you manage a long position. So when you open a long position, you have to buy first. So buying first results in you buying to open that position. Now, looking at it and managing that position in your account, when you look at the quantity next to that position, it's going to show a plus symbol next to however many of those you have. So if you have shares or options, you would have contracts. The quantity, if you were long on that options position, it's going to have a plus symbol in front of the number. If you're long in the shares, it's going to be a plus symbol in front of the amount of shares you have. When you purchase shares, you own them. So that's why you see own here. You own the shares or whatever security you have, whether that's options, the financial instrument, you are long in that position. Now, in order to close that position, which is another term we have not talked about yet, we talked about open. So if you open a position, you need to close the position. So if you bought to open, then naturally you need to sell to close. That's the idea. So the opposite of long, of course, is going to be short. So when you're short a position, you owe on that position. So what this person did, they borrowed shares. They sold first, and then their idea or their plan is to turn around and buy it back cheaper than what they sold it. Buy low, sell high, or sell high and buy low. So when you open and close or manage a short position, first thing you're going to do is sell to open. And they abbreviate these. You got STO, that's sell to open. STC is sell to close. BTO is buy to open. But we're talking right now about the short position. But those are the abbreviations that they use to describe it. So over here, when we get to O, when you're short on a position, you can tell that it's a short position because in that same area where they say quantity, quantity, it will be a negative. It will be minus. So that's telling you, hey, this is a short position for this many shares or this many contracts or this many, whatever it is. The quantity will show a minus in front of it. And that's telling you that that is a short position. And to end or close a short position, you need to buy it back. So now we're about to go over real quickly how to be long and short in options. Because we went over this first, this should make it a lot easier to understand buying and selling. All buying is not created equal. Now you know that you can either buy to open or you can buy to close. You can buy to open or you can buy to close a position. You can BTO or you can BTC. So when somebody just says I'm buying, that doesn't tell you if they're opening or closing a position. And now you know this. So there's also two different types of selling. And now you know that. You got a sell to close and you have a sell to open. You got a STC and you got a STO. So if somebody says I'm selling, this doesn't tell you if they are opening or closing a position. So now you understand this nuance. And now that you understand that, now we can discuss what being short in an option means. So the person that buys the option, remember, that is going to be a buy to open. So the person that buys it is the owner. They own that option. An option is a contract. So the person that sold that options contract, they are short and they sold it to open. The person on the opposite side of the trade, they bought it to open. So now both of these people have an open position. Here's the thing with options, because it's a contract, the owner is the one with the option. The one that sold it, they owe the owner the rights to what they have the option to. Now you know we're not talking about borrowing options because we owe the owner whatever we promised. So in the buy low and sell high strategy, when you do that, you're going to take a long position. You're opening up a long position that you are going to sell to close. So you buy to open and then you sell to close when you open a long position. But when you reverse it and you do a sell high and buy low right here, when we do that, then the idea is you're opening up a short position that you are going to have to buy to close after you open it. So you sell to open and then you buy to close. Now, what would that look like? If you bought for $20 and then you sell for $60, this was a buy low, sell high philosophy. So you open a long position for $20 and then you sold it for a profit. The difference between 20 and 60, $40. That's a long position. But let's say you take a short position. So you sell first. The idea is you want to sell high. So you sold and then you bought it back when the price fell. And then your profit is simply the difference. So you can generate a profit from stocks or securities or instruments declining or from them rising. And strategy that you are applying determines whether you are going to result in a profit or a loss. So when you own shares, that's a long position. And when you're long that position, that's the buy low, sell high philosophy or strategy. And if you owe on those shares, that is a short position. Remember, that is a short position. So in a short position, you owe shares that you borrowed, and your intention or your idea for your strategy is that you are going to sell high and you are going to buy them back low. So I hope you got that. As I'm giving you this walkthrough, I'm realizing that it's a column we need that's missing. So under the position statement, which is over here, Everything under this in this area is the position statement. And over here is the settings for the position statement. We are going to click on the settings. Now, when we click settings, this is the control panel for the columns. Let me show you that. Columns right here, all columns. So everything that we see up here are columns. And one of the things that I noticed was missing was that it's not telling you if it's shares or if it's options. So I know what that's called. So we're going to add it right now so you can see how you do this. We come over into this box right here where it says look up a column. It's going to be called type. So just put TYPE. Click on it. And then down here you click add. And now it's going to move over here. Now it's a few ways you can reposition this. If I leave it how it is, it's going to show up in the column behind option gamma. I don't want it there. I want it to be up towards the front. So we're going to put it right behind quantity. So you can click and hold and drag it up. And then when I drop it, it'll be there. Or you can select it and then click the up and down arrow. So you can see it moving. So those are the two ways to reposition it. So now when I click OK and we go back, now we can see our new column right here is our new column. And now it's telling us STK is stock and then OPT is option. So now we know what type it is. So now when we look at this part where it says quantity, we are short 100 shares of what? Stock. In what account? This is the margin account. How many days? Days is not relevant. Stocks don't have expirations. Options do. And so now we're going to talk about the trade price. So when we see this, trade price is what was the price of the shares at the time I did what? So we know I sold them to open this position. Now, if I had bought them, that would have been the trade price that I purchased them. But that's the trade price that I sold them. So we know if we sold those shares, then the idea is I need to buy them back cheaper in order to see a profit. What is last? What does that mean? What is last? 66.54 is the last trading price. So whether it was bought or was sold, it was both at the same time. Somebody bought it and somebody sold it. What was it at the time that trade happened? What was the price at that time? The last trading price, the very last one, was $66.54. So currently, that's what the market saw as the last trading price. I'm saying it over and over again. I want to make sure that is clear. Okay. So now what is bid? A bid is a buyer saying, hey, I want to buy what? Bud stock, because that's the column we're looking at. Bud stock for $65.89. Now think about it. A seller always wants to get as much as they can for something, or the seller is always higher than the bid. So the ask is the seller. So the seller is saying, I'll sell it to you for $67.36. The buyer is always trying to buy it for less. So that's how you can tell the difference between the bid and the ask. The bid is the buyer and the ask is the seller. The buyer is always less than what the seller is asking for. Earlier, we discussed profit and loss. Why did this change it to this large? Profit and loss. Profit and loss on the open and profit and loss on the day. But we didn't get into the technicals of how they actually calculate our profits and our losses. So that's what we're about to do now before we go into other columns that help us understand more about our positions. So let's go to this disclaimer. Again, I am not a licensed financial advisor, and this shouldn't be considered financial advice. Please be aware that opening and closing trading and investment positions can trigger taxable events. A lack of understanding how these transactions impact your overall tax obligations may increase both your financial risk and your tax liability. Now, we're going to talk about profit and loss. This is very important to understand because some people can get over on you or try to get over on you if you don't know the difference between these two different types of profits and these two different types of losses. So first, what is a profit? A profit is value that a position gained. So why am I saying value and I'm not saying money? I'm not saying money because you are gaining value in a position because of that security. That security is called an asset. It's an asset when you own shares. It's gaining value. It's not gaining money. The money comes from exchanging that for the money. So when you sell the asset, someone pays you money to cash out the value that's in that asset. That's where the money comes from. So let me elaborate on this a little more. When you purchase a car with a car loan, or you purchase a home with a home loan, the value of that car or the value of that home is used as collateral to secure that loan because that house or that car is an asset. You don't actually own that car or own that house. The lender does. They secure it. So it's a security. It's an asset that they hold until you pay them all the value from that loan, including interest and all of that. We're not going to get too technical, but the house or the car has value. And then once you sell it, someone gives you the value in cash. So that's why we're not using the word money right now. Your security is an asset, or a security is an asset that has value. And loss is value, a position lost. And we're calculating this by looking at our trade price. Our trade price is where we started. So where did we start when we opened this position? Then we calculate our value based on where we started. Now, we talked about P&L, our profit and loss, but we have not discussed our gain and loss. So this is another term that they use interchangeably. Gain is also profit. Loss is always loss, but they say lost. So that's value that you lost with a T on top of it, and that will be your loss. So they use gain interchangeably and put it with loss. So you got profit and loss, and then you got gain and loss. So now you know more terms to be able to navigate the financial landscape when you see these terms being used. In this case, we're specifically talking about the stock market. So when we open a position, it's going to keep making this low. I hate when it does. When we open a position, and as long as that position is open, when we open it, so remember, we got to close it to end the position, but to start a position, we open it. So any value that we gain or any value that we lose while the position is open is called unrealized. That is an unrealized gain or it's an unrealized loss. The key word is real. It's not real money yet. It's unrealized, but the value has changed on that asset. Now, we go to the next one. A closed position. Now, when you close the position, now that value has become realized. It's real now. It's not subject to what's going on in the market anymore. It's not rising or falling based on the movement of a price. It's locked in. So it's a real set value. But now, compared to your trade price, did you lock in a profit or did you lock in a loss? We know that our profits and our losses always start unrealized because that's during the time the position is open. Then once we close it, it becomes realized. This is a different day. If you've really been paying attention, then you can see that these are different positions than we started with. We were talking about Bud. I closed that position yesterday. So I took similar positions so I could share with you guys how to navigate the position statement. So some of these trades are not actually meant to try to be successful. They're to actually have them so you can see what's going on. So now under our instruments, we are focused on eBay. eBay is the company that we're trading right now, and the ticker symbol happens to be their name. Sometimes the ticker symbols end up being the company's names, and sometimes it's not. So I want to make you aware that sometimes it's easy, sometimes it's not. It'd be something weird. You'd be like, what is that? The minus tells us short. So we're short 100 shares because it's stock of eBay. The account is a margin account. Our trade price is 90.32. Here's the thing. Because the market is open, you can see that the last is changing and the bid is changing and the ask is changing and the profit and loss on the open and the profit and loss on the day. So all of this is moving. So I got this calculator on the screen and I want to show you what number they're actually using to calculate our profit and our loss. But these numbers change very fast. So attempting to do that is going to be very difficult. So I'm just going to tell you what they're using. They're using what's called a mark price. The mark price is the midpoint between the bid and the ask. So since it's two different numbers they could use, they just use the number in the middle. Your profit and your loss is hypothetical while the position is open. And the reason why is because they have no idea where you're going to actually sell at. Are you going to sell on the bid? Are you going to sell at the ask? Are you going to sell now? Are you going to sell later? So the best thing they could do to give you an idea of where you are profit wise is to just use the mark price between the bid and the ask. So this is how you access that. What we need to do, we need to go over here to the settings. We click settings. And now we get the control of our columns again. Just for recall purposes right here, this tells us all columns. What we're looking for the mark. So just type in M-A-R-K and it is this one right here. Add it. And because it's between the bid and the ask, there's exactly where I like to put it. And then I click OK. And now we can see what the mark is. This saves us time from having to use a calculator or calculate it. It's the midpoint between the two prices. If you look at it real close, they're using the trade price, the mark price, and the quantity to come up with our profit and loss since we opened the position. The negative $16 is telling you how much we've lost today since 12 a.m. Eastern Standard Time. So now we got that. Something else that might be really useful for you when you're looking at your position statement is to see the percentage of your gain or your loss on your open positions. So this is how we're going to do that. We go to settings. Let's minimize this calculator and we type in P/L and select profit and loss percent. Click add. I like to leave it right at the bottom. You can move it wherever you want and then click OK. So now we can quickly see our percentage gain or loss on these positions. This is eBay. So this option, that's the type. And what type? Is it a put? Is it a call or a put? It's a call. I'm up 20.18% on that option position. And then I know now how much did I profit since the open in a dollar amount, $14. And how much am I down on the day? I'm down $11.50 on the day since 12 a.m. Eastern Standard Time. So now I want to discuss the trades that we have on these positions. And that is going to be right over here. Over on the left-hand side of the screen, next to your positions, if you have any working orders, so this is a term we haven't talked before. If you send an order to the market telling your broker, hey, I want to buy or I want to sell something, that's going to be a working order if it doesn't fill immediately. So fill just means whatever the order you ask for, you got it. So if you say, hey, I want 100 shares of eBay, if that order fills immediately, it won't be a working order. But let's say you had a condition on that order where you said, I want 100 shares of eBay for $50 or less. If eBay never trades below that $50, that order will still be working depending on the order you submitted to the market. So I want you to understand, well, how is that even possible? That's how. So on the left-hand side of our positions, we can see red and green. So you can see it if it's fully spelled out. So the red is sell, the green is buy. And if you have more than one type of order on that actual position, then it's going to be green and red. So that means that on this tap security right here, I had a sell and a buy order inside that position. So when it's collapsed, to give me a quick view of it, it's showing me both as one icon. And then when I open up the tap position or the security, now I can see I have more than one position in tap. And on the shares, I have a sell order. On the option, I have a buy order. Now, if I had more than one sell order on the shares, I'm only going to see that one sell icon. I'm not going to see two of them. So that doesn't tell me how many working orders I have. It just tells me that the working orders I have are all sell orders if it's more than one. So if it was a buy order and a sell order, it would be the same thing like the icon I showed you earlier. If you click on them, any one of them, the sell, the buy, it will open up details about orders you have on that position, working orders. If you can't see what's inside this box, you can click and drag and adjust it to be able to view what's inside of it. I'm not going to go through all of these columns. Just want to show you what's available. We're just learning navigation right now. To the far end on the right, if you click this icon, it will open up a menu that gives you control over that particular order. You can make changes to it. To the left, this button right here or icon right here allows you to give yourself a note, ticker, just anything. And then I click save. That note is going to be applied specifically to that trade. And then the icon changes. So I know that I have a note. This was one I did earlier when I was doing the video. So don't pay that one no attention. Matter of fact, let's just delete note. So if I delete the note, now when we click it, we see that the icon has changed back. Now, the reason why this is such a quick view is because they really don't expect you to not just go up here where it says working orders. It's a whole section that's specifically made for your working orders. So now it's spread out. You can see all of the details and you can see the icons to the left that indicate you have notes associated with those working orders. So I wanted to make sure I showed you that before you thought that, why would they make it so small, man? That really sucks. That's because they did it for quick purposes. They don't expect you to actually use that, but just for quick reference, you can just click it without having to navigate to the top of the screen. That was the idea, I believe. It's also important to know that everything that shows up in your position statement is not an open position. If we look over here at NVIDIA, we can see that we have 0 in the quantity and we have 0 for the trade price. We don't have anything. Why is this important? Because you want to make sure you know that you have orders that could create a position. If you made an order and you forgot about it, when you come over here to manage your positions, you won't see it if they didn't put it there. If they did not put it here for you to be able to see it, and they only put open positions there, when you came to the position statement to manage your positions, if you changed your mind about buying or selling something, you wouldn't see it right here. You would have to go up to your working orders to find it. So that's very convenient and smart that they put that on the position statement, whether the position is open or not. If you have a working order on an instrument, it will show up in your position statement. All right, so I discovered an issue here, but I'm gonna explain to you what this is. Right next to these icons for working orders, there's a box, there's a space right next to it. If you create an alert, there will be a bell icon that shows you have an alert on that security. So let me show you what the issue is that I found. If I right click on that space and then select create alert, it shows up. But it, for right now, it's only doing it on certain ones. So like if I go to Rocket, I can't do it there because there's no box. You see how the box doesn't appear? But if I go to this one on tap, I have two pending order. I have two different types of orders. I have a buy order and I got a sell order. The box is there. When I right click on that box, create alert is there. But when I click it, it doesn't open. But if I go to Tyson, TSN, right up under it and do the exact same thing. So let me show you a workaround if I wanted to create an alert on tap. So what we do, we go up here to our tab that says charts. Click that. And now we right click anywhere on the chart. And now we come down to create alert. And that's how we can get an alert on tap. Now, it was something that I went a little fast about because I already knew that it was there. But let's just say on our chart, we're not on the right ticker symbol. This is the symbol box. So this is where you would enter the ticker symbol if it wasn't tap. So you would just type it. Let's say it was, what's another one we talked about? We said eBay. So if it was on eBay, we would just type in tap. And now when we right click and go to create alert, it's going to be an alert for tap. There's also a symbol box here. So either way, you can get the security you want to focus on. If the mark price of tap's stock is at or above $50. So we're going to put in 50. And then click create. So that's what the alert condition is. Now, if you go up here to Market Watch and scroll down to alerts, we can confirm that it's there. So earlier I had did it and I canceled it. So that's what that is. But right here where it says active, that's the alert we just created. So let's go back to our monitor tab. You see the bell icon in that box. So now we have an alert on tap and we know we have an alert on it because of that icon. Now remember, that icon is not telling us how many alerts we have. It's just letting us know, hey, you got an alert on this security. So if we want to see those alerts, all we have to do is click on the bell icon and then they will appear. And if you notice, yes, they both say cancel because I canceled them before I added this to the video. So you're not tripping. I know that on the other tab it said active, but now it says cancel because I canceled both of them. All right, guys, you should notice something a little bit different on our screen now. Over here, we do not have any event icons and we don't have any red or green being displayed on our profit and loss open and our profit and loss day. So if you've been following along, yours was not looking like mine. And that's because these two things are not cut on by default. So let me show you how we cut those on. We go up to the top of the screen where it says setup. Click that, go to application settings. We go down to display. And inside that display area, we click show news and corporate actions. This is going to show our events icons. And then check the box that says position statement. Now, when we click apply settings, they've been added. And really quick, let's go back up to setup and go to application settings. And here is another area that gives you control over your position statement. I'm not going to walk you through each one of these. I just wanted to let you know this is something else that gives you control over what we're focused on today. Now we're about to cover the icons that we see next to the securities. These are indicating events associated with that security. So if we look at Tyson, for example, we see 3 icons. So the $ icon is a dividend. The earnings is the light bulb. And the earnings call, or the earnings conference call, is the phone. So anytime you see an icon here, you can just click on it and it'll give you details about it. And then if you mouse over the part that's underlined, it gives you even more information. So you can click on that as well. The thing I love the most about this platform, besides the fact that it's easy to use, is the fact that they give you a bunch of different ways to do the same thing. Right up here, you can see that bell icon. Then you know that that creates an alert. Now, before we wanted to make an alert on the tap security. Right now, this is set to the portfolio metric. So we need to change that to a price condition. Tap that, click price condition, and now we type in tap, and then we set it up. So that's the same order window. You can't expand it, but you can scroll down within it to be able to see it. So that's yet another way that you can create alerts from this page without having to actually leave the position statement. Quantity column, our trade price, our P&L percentage, and our profit and loss since the open. If we click on those, they give us more information about the trade, about that position. But you can't control the columns here. You can expand them just in case it's too much information. You can't read it. You can move that around, but you can't actually customize these. In eBay, we're only controlling 100 shares and we bought them all on the same order. So the price at what we bought them at is all the same. But if we go to Tyson, we can see that we made purchases on Tyson shares at different dates and different times. So we bought 100 shares when it was $55.88, and it just says price. That's our trade price. And on July 31st, we bought 100 shares at $52.72. So our average price between those two prices and the quantity, so the quantity matters, that gives us our average price of that total share position. So if we didn't click that, it looks like we bought all of the shares for Tyson at $54.30. But when we click on it, open it up, we see that that's not true. We bought 100 shares at $55.88 and we bought 100 shares at $52.72. So that information is very important to know. So selling the July 31st shares for $55 would result in a profit, but selling the June 2nd shares for $55 would result in a loss. So this goes into what I was warning you about earlier with the taxes, the tax situation. So if you wanted to sell specific shares, you need to make sure you tell your brokerage that. If we wanted to sell and lock in a loss for tax purposes or profits for tax purposes, we need to know which shares we're selling. So here's where you can find that information to be able to tell the different prices you purchased or sold shares at. You get more specifics and details about the position. If we were to click on last, bid, or ask, it will open up an order. And it also takes us over to the trade tab. So now we're no longer on the position statement, and it opens up an order window for you to be able to tell the broker what you want to do. Do you want to purchase? Do you want to sell? How much? What? Et cetera, et cetera. If you go to ask, they're selling. So if you click on ask, it'll automatically be a buy order. When we clicked on last, it was a buy order too. But if you click on bid, this is going to be a sell order because you know bids are buyers. So if you click on that column, they think you have intentions on selling. So it's going to open up a default sell order. The sell orders are red. If I click on ask, now it should pop up green. So depending on what you're doing, They tried to make it simple by showing you green and red by letting you know, okay, this is a sell order or this is a buy order. And remember, you have buys to open and buys to close. You have sales to open, you have sales to close. When we click on any column that gives us more information or details about the positions, let's say we had a specific intent for these shares that we purchased. To the left, there's an icon right there. If you click that icon, it gives you the ability to type in a note. So we can say sell at 55 and click save. So now let's say we forget or we don't remember why we purchased them shares. Let's say we forget why we purchased those shares or what our intentions were when we purchased them. We can click on quantity and click on that note, and you see it's a different icon now. So it's letting us know, hey, you got a note here. If we click on it, we can remind ourselves what our intentions were when we purchased those shares. So here's the cool thing about the notes in those columns. They transfer automatically. So now if we go over the trade price, it's showing that we have a note there. They're not keeping them separate. So you know you have a note there. So even if you don't use the same column, as long as it's on the same row, they'll make sure that they show you you have a note on that position. That is dope. Oh man, that's dope. To the far right of our positions, to the far right, this small area right here. If I mouse over it, you can see these icons appear. This is what I'm referring to. This is an additional menu. It even appears on our subtotal row. And I want to show you this too. If you click right here under quantity on subtotals, it's going to give you all of the information real quick. So if you wanted to get a quick overview, you could click that area too. Over here, this menu, when we click it, and it gives us yet another way to manage and monitor our positions. It also has a menu right next to subtotals. All right, here we go. Options, a strategic investment, 5th edition by Lawrence G. McMillan. And this is a wonderful book. It has a sleeve that goes on it, but I didn't want to tear the sleeve up because I travel around with the book and I carry it with me and I don't want to tear it up. But I have a link for it down in the description. And that book is very, very complete in detail in my personal experience from the books that I've read to really get a great understanding on options. Options are like a wonderful tool. They like a tool you can use to be able to do all different types of things in the market. Hedge your positions, profit on the way down, profit on the way up. There's all different types of ways you can take advantage of it. But in order for you to do that, you really need to understand them and know what you're doing. And part of you understanding it and knowing what you're doing comes from you putting the work in, and you putting the work in, not with just the education, but putting your work in with learning how to use the platform. It doesn't matter. Let's use hunting, for example. If you read every book on hunting, you read every book. I mean, every book you can on hunting deer. You got the kit in the tree. I don't know what it's called, but you got the raincoat on, the camouflage and all of that. You got everything. You know to use a weapon and all of that. You got all of that set up, right? But you ain't spent no time in target practice to be able to hit anything. You haven't put any work in to know how to use the tools you need for you to be able to hunt. It doesn't matter how much book smarts you get. You got to learn how to use the tools. So that's where the paper trading comes in at. That's wonderful. But this is the book that helped me understand options a lot. And let me help make this book look smaller, even though it looks huge. This is the idea. Even though it has a whole bunch of stuff in it, you only need to find a strategy that works for you. So everything in this actual book is probably not something you're actually going to use. It looks like a lot, but you probably just need to focus on the stuff that works for you. And you won't know that until you go through it. Jump through the book. You don't have to read it in order. Look into different titles of the chapters and see what interests you. But I have a link down in the description for you to get a better understanding about options. I hope you guys enjoyed the video. I loved making this video today, man. It was so fun and worth it. You already know. I hope that you learned something, and I hope that you earned something. Put your thoughts down in the comments. I would love to hear what you guys think, and stay tuned, man. Make sure that you subscribe to the channel and all that other good stuff, because I'm gonna keep it coming, man. I'm gonna keep it coming. I am excited. I took the E off, boy. I'm excited about doing more content with this stock market stuff, because there's some opportunities out here and I'm loving it. Okay, so you guys take care and God bless.